Good day, traders. Hope you're all doing fantastic. This will be mini lesson 3.1. We'll be building, or this is an extension of the previous lesson, which is the daily bias. And we'll be focusing on premium and discount. So, focusing on, like when to place the premium discount tool and when not to place the premium discount tool. So, I have a few rules or a few things that I keep in mind when I use it. And remember, it's not something that's going to work 100% of the time and always going to give you the exact same results. As with everything else, there's always some discrepancies or always something that when price is not working 100%. So just keep that in mind. So first of all, remember from a higher time frame. So let's just quickly put in our 20-day look back just so that we can start from the top. So if we just take yesterday's price action, 7 till 7, and we go just quickly to the high time frame, we obviously then use the highest high and the lowest low within that range. So that would be the highest high, and we would have our lowest low in here. So from a higher time frame point of view, until we proven otherwise, we will place our tool like this from the high to the low. So we have our high there, and we have this low over here, which is the lowest low, and we'll be looking for price to move from the discount to the premium. Remember, when we're trending down like this, there's no way in knowing that this is going to be the low. So technically, only once we've broken some structure like this, then we can know for certain that price is going to move from the discount to the premium. So that's just something to keep in mind. For instance, there's always a chance that when price can just continue towards the downside, and then we continue on selling. So when price is doing something like this, where price is not yet ready to move back towards the upside, so obviously we can now see where is our levels, and we can see there's an area, we have an order block over there, we have this previous high, and then something in here as well. So those are all zones and areas within the premium where we would like to see price trade to. But until price is giving us that indication that price is trading up to that areas, we should look at the lower time frames and still apply the same tool. So what do I mean by this is we always use this tool with a breakoff structure. So when we have price moving, we break structure. Now we have that structure break. And now you can use this tool and we can look at the premium and discount. So as price gives us a confirmation that it is pulling back, we can use this tool. And then remember with the examples in the bootcamp that you still be watching is we're looking at the imbalance, we're looking at a block, we're looking at a, in this case, previous high. Those are the things that we're looking for. So now I'm looking for one of these areas or a combination of them for price to return into, react off of, and then continue further towards the downside. Then I want to see again a structure break over there, a structure break, and then we place the tool again from high to low, and we use the same, looking for the same things, order block, sorry, imbalance, order block, and then previous high. Again, looking for price to make a pullback to one of those areas and then to short it again. So that's more or less the trend following formula that you can apply to your trading. And always just look at the swing points and look at the points and broke structure for that time frame. So let's say, so we have this now in mind. So now let's have a look. Okay, let's take this just away. Quickly take this away. Now looking at the 1 hour. This example, we're going to be looking at the 1 hour. We're going to look at this recent trend towards the downside. We can clearly see that we broke a structure. So, and we started turning around, so we can place the tool, and we can see that on the 1 hour, we have imbalance. So there's our imbalance area over there. Let's just use this tool. I think for now, just a moment. So basically, we then look for with our imbalance, our order block, and our previous high. And we can do that across time frames. So we don't necessarily just need to look at the one time frame. We can then look at multiple time frames. So we can start off by looking at the hour. We can see that okay, we have the imbalance over there on the 1 hour. Let's quickly do this. So now we know that we can make a note here. So we have 1H imbalance. So on time frame, 30 minutes still imbalance. We can just refine it a bit more. 15 minutes. We can refine it as well. Then I would refine it towards where the discount stops and the premium starts, and looking at where it starts as well. So this is then my most valid imbalance. And then you can also see that we take the 50% of it. Look at that. So the rule of thumb is on GU, we would love to see 50% of the valid imbalance, refined imbalance being tapped. So you see how we refine the imbalance, and then we get that perfect reaction over there. So obviously we could have looked at this order block as well. But the main thing to know is that the first area of importance for price to reach is the imbalance. So we first need to see the imbalance. If there's imbalance on multiple time frames, the 1 hour, 30, 50 minutes, all of those time frames we have imbalance, then this is a valid area for price to return to. 3 minutes imbalance there as well. You can see how we can refine the imbalance all the way down to the 3 minutes. Imbalance, imbalance, imbalance. So from a high time frame, especially if we see like from a 1 hour, there's a big level of imbalance. So we can refine it all the way down to the 3 minutes to get that imbalance. Now, obviously, we would expect price to rather go up towards an order block. That's why we often miss trades, because we think price has to react off of an order block. But you have to remember, when we have our premium and discount tool, the bare minimum requirement is imbalance. That is the minimum requirement. Second grade is the order block. And the last one is the previous high. Now, obviously, that's where the profiles come from and where I combine those to get certain profiles. In this case, we have a previous high and the imbalance. Very clear imbalance, refine as well. The next thing we can look at is timing. For instance, let's look at where was exchange open. This was the New York Open, right over there. So New York opened and it started rallying towards the upside. So now we have to look at where could price potentially be heading to. We see we have this area, and then we see the reaction. And then looking on the 1 minute, we could potentially get a confirmation entry from the 1 minute in this area or not. Let's back the 5 minute. Price comes up, gives us potentially an entry, and then starts trending towards the downside. So the key thing to take away from this is that price gave an impulse towards the downside, pulled back towards an area of interest, and then start pushing down. And now price moves down again. And then we have another structure break. I'm just going to give us all the information again. So here we had another structure break, and we can plot this tool, and we can see in this case, price never came back up towards an area, and that's perfectly fine. That will happen. We had again a structure break. We can again plot this tool. And we can see this time price did come up into the premium. We had another structure break here as well. There's a structure break. And we can look at the swing point that broke structure. We can either take this one, or the most accurate one was the one that broke structure is this one. And you can see price did come back up into the premium. Then price consolidated, and then it's more difficult to use it, and it's not really possible to actually use it as definitely, but obviously we could have expected that the price is still in a downtrend. There's breaking structure. There is our tool. And in this case, price went for the previous high, swept the high, and then started flushing towards the downside. So this is now all on the 1 hour, just following the trend, because the high time frame, the daily, and the 4 hour for our daily buyers, there's no evidence the price is yet ready to turn around. So we can look at the lower time frames and we can just follow the breaking structures and follow the premium and discount tool on when to place those. Now we can also use this on complete lower time frames. So this is now 50 minutes, still following the trend. There is a breaking structure. We can use a swing high, swing low. There is the first order block, 50-minute. That is where price returns to. And we can see that is your entry, stop loss above, and take profit. So sometimes it won't work out, and sometimes you won't get that perfect moves. But this is the general idea of what is meant by how I use the premium discount tool. Again, we have another structure break over here. We have a push towards the downside. Price returns to the imbalance. There's the imbalance. 50% of it, and starts pushing towards the downside. And again, makes a run on the liquidity below this low. So there's our liquidity low. The trade entry over there. The stop loss placement is much more difficult with imbalance entries, because then you kind of need a confirmation entry, 1 minute entry, so that you can place your stop loss above the previous structure, because you need structure to know where to place your stop loss. And then this is typically what the trade would then look like. So the whole idea is that we just follow the structure breaks, follow the order flow, and as we go along, we can place the premium and discount, and we can look for price to return into the premium, and then react off of it and continue towards the downside. So you can look for confirmation entries in this area. You don't need to take an aggressive entry. You can wait for the 1 minute confirmation and then take the trade from there on towards the downside. Also towards the upside. We had this leg towards the upside, broke structure to the left, looking for the first. In this case, we had profile, we had a previous low, we had imbalance, and then we had an order block there as well. So now we're counter trend trading, doing the same thing. And let's have another look. When it's consolidated, it's rather difficult to really make out. But again, over here, you can see we have this push towards the upside, which broke structure to the left. We can see we broke structure. Price returns to the imbalance or something in this area and then reacts off towards the upside. The counter trend trades, it's obviously has less probability than the trend following trades. And the trend, what do I mean by the trend? The higher time frame direction, because our higher time frame, we're looking bearish. The 20-day look back, let's just get our things together. Because of the 20-day look back, we're looking for sells. Those are our pro trend trades, and they have the higher probability. Counter trend trades, when we use the same method, is lower probability, so you need to make sure you take your profits. You need to make sure that you don't leave runners, because ultimately price is bearish and potentially moving towards the downside. So that is in short the on premium and discount. Then you can always apply. For some reason, this is now very slow. You can always apply this to all the time frames, and the most important thing to remember is that if you apply them with the trend, pro trend, it's a higher probability trade. If you apply them against the trend, it's a lower probability trade against the higher time frame trade. And we also apply this with what do you call it, with the session openings as well. For example, let's have a look at this one. This is our leg towards the downside. This is our Asian session over there. There. So our Asian session. So we can potentially look for a push towards the upside. So we can use the protraction tool, and we can see we have one projection over there, 0.5 over there. So this area has some value to it. You can just see where did it react exactly at the number one. There's that one. We have a order block. This is the leg towards the downside, a valid order block. We see price pushing up towards the upside. We have some previous highs there as well as the imbalance. Perfect trade setup. Unfortunately, in this case, for some reason, I was looking for price to go higher, but the main strategy and system that I use is looking at the most recent structure break laid towards the downside that had a strong structure break. We have an almost full body candle. Well, it's actually not close to full, but we have the order block candle, we have the imbalance, we have the previous high, we have the Asian session moving sideways, price moving up into the projection block, and then price pushing towards the downside. I will make a separate video on this trade, breaking it down, all the things that I look at for myself, and then obviously for you as well. So that's all I'm going to say now about premium versus discount. Take these concepts, apply them to yourself, apply them to your trading, and yes, I hope it helps a bit. All right, guys, have a wonderful day. Bye.